The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN 9:06 a.m. We got about 24 minutes to go until the start of trading, and we get the markets in negative territory, but clawing back a lot of the losses we had last night. You start things off with the S&P. We're negative by 2 points right now. You check out the low we had as Europe opens up. We trade from a price point of about 45.21 to under 4,500. Since then, we've almost gotten back to where we were as of the close yesterday in the S&Ps. Yesterday, you had the S&Ps negative, you had the Dow negative, had the NASDAQ actually positive. NASDAQ last night, see the volatility down to almost right where we were on the open. NASDAQ drops from about 15,680, this is the NASDAQ 100, down to 15,610. We get it all back, though. Look at that. Drops immediately, and then at about 3 a.m. Eastern time, Europe does. As it opens, accelerate lower, you bounce back 15,670. The Dow had quite a negative day yesterday. We were sitting at 35,400 to start the day. Overnight, you make it down to 34,885. Dow back above 35,000 now. The Russell negative by 4 points. Bitcoin with some volatility yesterday to the downside in a big way. El Salvador starts accepting it as a currency. You have 53,000, the print going into that opening, and man, quite an open it was. You go from about 51,000 as the day starts trading. You hit a low of 43,705. We catch a bit of a bounce. The market was lower again overnight, 46,440. Now, there's a couple things going on in the Bitcoin crypto sector. Excuse me. You have the SEC saying to Coinbase that they should not go forward with an interest-bearing idea for people to be able to earn interest on their crypto accounts on Coinbase. So that putting a hurting on Coinbase as well today, probably putting a hurting on some of the Bitcoin cryptocurrencies. And there's Coinbase from about 267 yesterday. You accelerate to 257. There you see the volatility it had yesterday just with the cryptocurrency market itself crashing, bringing Coinbase from a pre-market level of 288. Even if you look where we were as of Friday's close, 280, you're down from 280 to under 260 this morning on Coinbase. Continuing to jump down the line, we got gold back under 1,800. Quite the negative day for gold yesterday as well. We had some dollar strength yesterday. Right now, the dollar is somewhat flat. We're trading at 17.97 the price of gold. You got silver right now down 13 pennies. Silver coming right into those lows we had yesterday morning as well. We jumped to notes and bonds and a little bit of a reprieve from the action we had yesterday in terms of you had lower price and higher yield yesterday. Right now, we get a little bit of a bounce up 5 ticks in the 10-year. We're talking about a yield of 1.35% right now, and we jump over to the VIX. Here's one to keep your eye on. Now, the VIX, excuse me, folks, up to 1964 overnight. That is quite a spike. You're back to 1862 right now. At a time when, now the S&P had quite a negative day yesterday, but look where we were overnight, almost to 20. And even with the market opening almost flat, you have the S&P sitting down just 3 points. Excuse me. There's your S&P. Now I'm going to put this S&P on a daily chart here, just for some context. There's 2 trend lines you could be dealing with here going back to maybe November of last year, October, almost a year ago. We've been in this channel line more recently since about May. You probably have some upper pressure in terms of the upper channel line, a channel within the larger channel potentially, or maybe we've closed in where this channel line, we're now right in the middle of that area. But what I'm trying to show here is that the VIX being almost pushing 20 right now, with this being what the market has done, we're basically sitting just chopping around for the last 6 or 7 days at all-time highs, right? We're back to basically where we were August 30th, which has a low of 4,500 and a high of 4,534 that day. We've been shopping around in this range since then. Yet you take a look at the VIX over that time and look at the spike we got going on in the VIX, all right? There's August 30th for you. The S&P at the same price point, we had a VIX correlating of about 1665. The market now saying we need a lot more premium for this market. We're talking about 1865 right now. and he almost made it up to 20, as I said, 1964. Sometimes the VIX will lead the market, folks. You correlate it to where we were last night, okay, back to a 15-minute. You see the spike we had correlating to 4:30 a.m., about 4 a.m. Eastern time on the VIX. That is correlating to that drop-off we had, right? There's your low right there. But as the market has gotten back all those losses in the markets, you have the VIX that not quite comfortable giving it all back. I mean, if you were going to give it all back, you'd be under 18, keeping some of that volatility in there as we await the open in 18 minutes or so from now. All right, let's jump around a little bit in terms of what's being talked about. You have a couple downgrades out there. Yesterday, we had Goldman Sachs downgrading their economic growth estimates. You have Morgan Stanley downgrading U.S. equities on growth risk. Positioning sets up market for steeper fall is what Citigroup is out here saying. And Citi, let's see where they get into, because positioning has become ultra bullish with longs outnumbering shorts by nearly 10-1. Half of those bets are likely to face losses on a drop in the index of as little as 2.2%. That's one to keep your eye on, folks. That's really what I want to talk about there. You got a 10-1 long to short, and those longs are going to face a loss if you pull back 2.2%. Well, isn't that like a guarantee eventually, folks? I mean, with 2.2%, for some context here, you're talking about the S&Ps are at 45.14. So 45 points is 1%. Okay, so 90 points is 2%. 99 points is about 2.2%. So call it 100 points even. You're talking about 44.15 essentially. Okay, that means you just got to get back to, let's zoom it in here. 44.15 in your negative prices. There you go. You're talking about August 20th. We're on September 8th. All right, that would have been a record territory as recently as about a month ago. So if we pull back to record prints on the S&P just as of a month ago, you're going to have half of the longs in the market in a losing position when longs are 10-1 in the market. Even a small correction could be amplified by forced long liquidation. That's usually how the way down is a little bit faster than the way up, right? And September is the worst month of the year for stocks in the last 2 decades. I don't give a ton of credence to this, especially right now. If you're talking about seasonal factors, those are very important. There's a lot going on with COVID and shutdowns and stimulus that might overcome some of those seasonal patterns that we're all used to, but you can't deny how that sticks out. And when you look at it over 2 decades, and you look at it over the fact that potentially September, an important month as everybody comes back from summer trading, nonetheless, you're talking about a negative 0.8% return over 20 years. Now, what can happen there is, you get a couple tough months over 20 years, folks. 20 years is not that big of a sample size in reality. As I jumped up there. You get a couple bad months, you average it in over 20 years, and yeah, you're talking about it could skew things in dramatic fashion. But nonetheless, keep your eye on it. That 10-1 number, though, keep your eye on that as well at a time when the VIX may be saying, market, not quite giving back that premium just yet. Stay tuned, folks. We get the markets in negative territory. We'll be coming back, talking to our man Kevin Hincks. We'll be talking markets. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We get the S&P negative 6 points, NASDAQ negative 10, Dow negative 66 points. You see the divergence I got here on the chart when you're talking about the Dow potentially bumping up near the bottom portion of that channel line, correlating to where we are in June, July, and August, 35,028. S&P's kind of in the middle, potentially towards the lower, but the NASDAQ really bumping up to the top of that channel line, 15,664. Tech stocks having quite a performance and continuing the run as we go from here. Folks, let's jump over to our man Kevin Hincks. Every trading day, 11 a.m. Eastern Time, Fast Market on the TD Ameritrade Network. Kevin Hincks, Alex Coffey, and the team breaking down the day's market action, walking you through hypothetical trades, folks, talking about defined risk and options. Kevin Hincks, good morning. Oh, he might have had to make a trade, folks. We'll see if we can get him back. I know we got some earnings coming up. Today, we're going to get Lululemon while we wait for Kevin, because they always may be covering some of these headline numbers. We're talking about Lulu, jumping over to the Analyze tab. Folks, head on over to the TFNN. Click on the Thinkorswim TD Ameritrade banner. Download the demo account. You can follow along with the host as they walk you through these trades. I have the Analyze tab up. Lululemon, you're talking about potentially about a $20 move expected on their numbers. Maybe they'll be talking about that. Let's jump over it. We got Kevin back. Kevin, good morning, man.
Good morning, Tommy. How are you? Sorry about that.
I'm doing well, man. So what do we have going on in the market, Kevin? We got a little negative action. I was looking at interesting, man. When we were talking to you yesterday, everybody was just kind of giving their analysis of Bitcoin, man, and we were talking about it. I pulled up the chart, 915, quite the volatility in Bitcoin, of course. You got the SEC coming out saying that they shouldn't be into interest-bearing accounts, so volatility in that sector. But I wanted to jump to Kevin. There was an article out here on Bloomberg talking about some slight revisions, and they have some statistics up here talking about longs to shorts, man. They're talking about 10-to-1 longs to shorts, and I get the quote, is that half of those bets are likely to face losses on a drop in the index of as little as 2.2%, Kevin. When you hear that, man, do you think that's something investors might be paying attention to? Those are some pretty bullish numbers as we come into some fall trading right now.
Well, yeah, I expect the market to get a little bumpy, but that doesn't mean bumpy can't be higher. It'll be, we're getting to the end of earnings season, so that, as we get into the tail of those, right now this market has very little inertia, but that being said, Tommy, there's still a bunch of data that's still hanging out there, right? We're going to get a JOLTS number here at 9 o'clock that may provide some cover for last week's jobs number. Because if this number is a big number, north of 10 million jobs, it'll tell everyone that that number last week isn't indicative of the upcoming meeting between open jobs and potential employees. So the question is, and I was just on with Oliver Rennick talking about this, is who got it wrong? Was the number wrong in the jobs payroll, the payroll data, or was it the consensus that was wrong? Why was that number 730,000 when these benefits hadn't worn off yet? So it's going to be interesting. Were they looking for teachers to provide that? That's still too early. So my problem was not with the number. It was why was the consensus so high? Now, that being said, with 10 million open jobs out there and 7.5 million people coming off, some type of federal assistance, there should be a meeting of the minds in some of these jobs. Not all 10 million, needless to say, but this is the dust that has to settle for Jerome Powell to decide to move on interest rates, in my opinion.
Maybe not 10 million, but maybe more than a couple 100,000, right? In the few months that we got coming up, man, for sure. I think it's so interesting as traders, man. Usually you're liking volatility. Sometimes you're just liking some higher premiums and you're looking for no volatility in the market. But it is interesting that we come out of the summer. We come out of literally on Labor Day. The benefits expire, and then we have schools opening up as we kind of have a surge going on, which is just a lot of variables in play right now for traders as you look to this market. What I thought interesting, Kevin, we got a VIX this morning at 1875, and that's a little bit of a rise here as the market really was able to claw back a lot of the losses that it had. We're sitting at 45.13 in the S&Ps. You're basically back to where we were trading at 5 or 6 days ago. And meanwhile, we have the VIX with a little bit of elevation in terms of 19, almost hitting 20 overnight right now. When you look at a market, that's kind of cool as traders that at least you have volatility if you're playing some of these equities, Kevin, because like you say, it doesn't necessarily mean that the market needs to pull back, but even a plateau when you're dealing with the VIX at almost 19 right now is pretty staggering there.
Yeah, if you're looking at an 18 or 19 VIX like we're looking at this morning, you're salivating over that if you're an options trader because it's a simple connecting of the dots. Higher levels of implied volatility means higher premium in options, which means higher levels of decay if you're a net seller of premium. So that is always a good thing. That implies movement. That implies higher levels of premium and options. All good things for options traders, Tommy.
And Kevin, was it the rule of 16 on the VIX, right? That a third of the time that the market's going to trade up or down by 1% at 16?
Yes.
So an 18, I mean, that's some big numbers when you're talking about a 1% move. If the VIX is at 16, that you'd be hitting a 1 out of every 3 days during the week, that you'd have a 1% move. We're pushing 19 right now, pricing in just to put it in context of the moves, because 1% now, man, 1%'s, you're talking about 350 points in the Dow. The VIX is off the S&P. It's 45 points. But those are some big numbers as these markets continue to climb. We have volatility, of course. Tech stocks always being volatile, man. Tech stocks higher yesterday. We can get some earnings today. I know we're going to be talking about on the program today coming up at 11, Kevin.
Well, today, obviously earnings late in the season like this are getting a little thin. But we do have two pretty good names to talk about today in Lululemon and RH, the old Restoration Hardware. So we'll get those two names for sure. Do we go to talk about GameStop? Well, we'll see about that. But I know that Lightfolio is going to do a presentation on Lululemon today, so that'll always be one worth watching.
And that is such a cool company, man. I mean, talk about a rocket ship. They're in retail. They've been crushing it. You just had an all-time high of $417.85 last week, I believe that is. And I wasn't aware of Restoration today. That company, too, man. You want to talk about rocket ships from $73 at the COVID lows, we'll call them. You came into 2020 at a price point of only about $200, and we're sitting at $664.26 this morning. Well, Kevin, we look forward to the program as always, man. We'll be watching at 11 o'clock. You guys have an outstanding day.
Thanks for having me on, Tommy. Have a great day.
My pleasure as always. Folks, tune in. They got a couple great companies that they'll be talking about for earnings today. Always nice to see them walk you through those hypothetical trades, folks. It's how I learned the best, is watching, actual trades, trade management. They talk about trades they made in the past. They roll those trades, they manage them. Maybe they're closing them out. Maybe they're closing out one side of it, etc. Lulu. You talk about these companies. Winners and losers, folks. This, COVID, there's one thing it did. It accelerated the transition from companies that were profitable and accelerating and growing, and companies that were just shrinking and struggling. And we're seeing it in some of these companies. Lululemon, Restoration Hardware, two of the ones gaining in a big way over the last year and a half, couple years, even longer than that. Check out this chart when you go back. Let's go back 5 years. How about $47 on this chart? Want any more? Let's go back to $2 in 2009. Stay tuned, folks. I'll be right back for the market open.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We got the S&P down about 6 points right now. Tech stocks, NASDAQ 100 slightly in the red. All the markets well off the lows we had overnight, though. Dow off 50 points. The Russell negative by 8 as well. I was talking to Kevin about that VIX and the rule of 16, if you're not aware. So the VIX, Volatility Index, CBOE, this is done off the S&P, folks. It is used to gauge the market volatility overall, which is a good gauge, but it is priced off of the S&P. And what it is figuring is that when you tie it into actual context so you can wrap your brain around what this is saying, really about what it means the market's going to be doing for trading. If the VIX is trading at 16, that is saying that 1/3 of the time, and they got some good numbers in here, and you know what, folks, it was even better. I didn't even realize it right now. We got a TD Ameritrade link up here. How about that? You know what's pretty cool is I literally Googled it, and I was like, which one works? Which one works? Right there, ticker tape. I thought it was ticker tape. Nope, TD Ameritrade. They have outstanding education across the board. And look at this. Who do we got here? Our man Kevin Hincks, right? Gotta love it, okay? So perfect. This is why you should tune into, folks, to Fast Market. Talking about 1 out of 3. So VIX is 16, more precisely 15.87, and that is approximately the square root of 252, which is the number of trading days in a year. So that's where the 16 comes in. Now, what that means when you tie it to the implied volatility that this is telling you, that is saying that 1/3 of the time, or 31.8%, you're going to trade by more than 1%. So in the S&P, that means basically that if you're buying volatility at a VIX of 19, you better believe that you're going to be looking for a move of at least 45 points in the S&P more than 1 out of 3 days. Now, where it gets interesting is you start pushing that even higher, right? Now, we're at 19 right now. For simple math, if you go to 24, right? So it's a 50% increase in the VIX going from 16 to 24, it would essentially be a 50% increase in the move you would be looking for. That would correlate to a 1.5% move in the SPX, 31.8% of the time. We're rounding to 1/3, just so our brains can we can wrap our brains around it, you know, to understand what we should be looking for. And the VIX at 32, that's going to be double 16. That's going to be a 2% move in the SPX 1/3 of the time. Those are big moves. You know, they're not big moves if the market really gets rocking, as we know, especially to the downside. But that way you can walk yourself through that and keep your eye on it. Makes a little bit more sense when you talk about a VIX at 19. That's pricing in some decent moves right now in the market. You're talking about a move of potentially 1.2%, right? That would be a move of 50 to 55 points in the S&P over the next 1 out of 3 days, et cetera. That's a decent move that the market's pricing in. But man, when you look at it overnight, I mean, what do we get? We got about 30 points from yesterday. I mean, yesterday, intraday, you had to move about 30 points, okay? But you back it up to overnight, and it's basically priced correctly. You were trading at 45.48 overnight. You traded down about 40 points. You traded down almost a full percent there from where we were overnight to the lows of Tuesday. Didn't quite finish that low, though. All right, let's jump around to what else we got going on. Jumping around to some of the stories I had up here. Taking a look, and we'll start it off Apple. Apple App Store changes failed to sway lawmakers bent on overhaul. Not surprising here. All right, Apple trying to get ahead of the regulations that are potential, but I wouldn't see this playing into too much of their stock as well. Apple negative on the open, but you're talking about quite an acceleration yesterday to 157.26. The story out there that they lost their head of Apple Car. That one is one to keep your eye on, as he got poached. And human capital is just huge, folks. You can't overstate human capital in an area like the technology that is driving self-driving cars. Look at the market's getting a little bit of a pullback. Don't say the NASDAQ 100. I mean, look at how Apple can just drive it. Apple drops 50 cents, right? And I'm sure they're all dropping a bit. Microsoft's kind of flat. Let's jump around because Amazon shares, Amazon dropping a little bit. You got tech stocks dropping a little bit right now. Let's check on Google. Yeah, a little bit of a drop on the open as well. But Apple, 50 cents, that can put a little bit of an acceleration in the NASDAQ, and we're seeing it right now, down 43 points. You just dropped about 50 points on the open. We'll see if we challenge the lows we had overnight. You're talking about a low about 25 points of where we're trading at right now, 15,626. All right, let's jump to what else we got going on. Some of the stocks are making moves. We talked about the crypto. Coinbase trading lower. They were down 3.2%. Let's see how they're opening. Not what you want to hear. And this is one I plan on down 3.7% right now. Going to be interesting to see as we take a look how the SEC battles this in terms of Coinbase not allowed to provide interest on crypto exchanges. I imagine that's going to be challenged. And I'm not sure where that one may fall. You know, the SEC has a lot of ability to regulate, especially anything like a currency. And the word currency is in the word cryptocurrency. But they received a Wells notice from the SEC last Wednesday saying regulator intends to sue Coinbase over the product called Coinbase Lend, the company disclosed on a Tuesday night blog. SEC immediately did not return a call for comment. Chief legal officer indicated in the post that the company was caught off guard by the threat, considering its efforts to engage with the regulatory agency. Well, there's their PR spin of things. That usually does not come as a complete shock to a company like that. Nonetheless, the product in question is billed as allowing users to earn a 4% annual percentage yield, APY, on so-called stablecoin by allowing Coinbase to lend those funds to verified borrowers. Coinbase backs U.S. dollar coin and guarantees it always can be redeemed for $1. Here's the thing, though. This was just in the press. And they should do a better job on CNBC, not a fan of CNBC, not surprised, of explaining what the somewhat controversy surrounding the supposed stablecoin USD coin that is backed by, it used to say on their website, folks, it was backed by like dollars, and then they changed it to say it is backed by assets. But we have to understand is that if it's backed by assets that are volatile, it's not a stable coin, because when everybody runs for the bank and you're owning a quote unquote stable coin, which is just another cryptocurrency, and then they're taking the money that backs that, and what are they doing? Are they lending it to other people? I mean, they could just be buying real estate at highs to back that. And you could see how the collapse could just correlate and just cascade across the entire complex if you have things that are supposedly supposed to be stable and backed by stability. Meanwhile, they're just backed by assets that are as volatile as the asset that's supposedly the stable coin itself. Nonetheless, not surprising that you get a little bit of lower action in that, but we'll see how that plays out, because I imagine there's got to be some way for people to achieve interest on a cryptocurrency. There should be. That's an asset. It might not be a crypto. Might not be a currency. It seems like it's an asset, and I wonder where the SEC's regulation ability comes in from there. All right, jumping around to what else we got going on. Let me just continue the line here in terms of what I have pulled up here. Mortgage demand. Yeah, falling to the lowest in 2 months as rates stagnate is the headline there. Average contract rate for a 30-year fixed mortgage, unchanged, 3.03%, still remarkable. Applications to refinance a home fell 3% for the week, 4% lower than a year ago. Purchase application volume down 18% lower than the same week a year ago. Total mortgage application volume fell 1.9%. Still, you're talking about 3.03%. Makes sense that maybe a little bit of refinance slowdown after we're just sitting at low interest rates for a while. Stay tuned, folks. We're going to be talking to our man Teddy Kegstad when we get back. We're going to be talking Forex. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. A little bit of a reversal of yesterday's action. We have the Dow positive by 25 points right now. We get the S&P's negative by 6. NASDAQ negative by about 0.4% right now, negative 60 points. Russell leading the way down off 16 points, or about 0.75%, trading at 22.75. Let's jump over to our man, Teddy Kegstad, folks. Every Wednesday, we talk to Teddy at 40 past the hour. You can reach Teddy every trading day at forex-trading-unlock.com. Teddy Kegstad, good morning.
Good morning, Tommy.
How was your Labor Day, man?
Oh, it was fantastic. I think you can see the sunglass little mark on my face from the sunshine.
That's how it should be, man. Gotta love it. Getting
Right.
out. We had some beautiful weather, of course, here, and not of course, but we had some beautiful weather in Florida as well. Still a little hot. We're waiting for a little bit of cool weather, but a great weekend, man. And back to trading as we kick off fall trading here. I was taking a look at some of the currencies. We have some moves going on. We had a move in the dollar yesterday, some move in gold, of course. Where do you want to start off? What's on your radar this week, Teddy, as we kick off kind of September trading as we're all back from summer action?
Well, dollar bulls are gaining strength because of the interest rate market, and you can tell even gold's leaking, So, I mean, dollars are in demand right now. I mean, even by Bitcoin, obviously someone's selling and they're converting it to So, dollars are in demand right now. You have the U.S. dollar Swiss and the U.S. dollar yen making higher move highs and pressing. They're looking for a breakout to the upside right now. So that's a very good sign of strength for the U.S. dollar.
Why don't can we take a look at the yen? Because I pulled the yen up, and we had not reversals of some of the trends we've been looking at, but no real reversal there at all on the yen, as in continuing to kind of bump up against the maybe close to that upper boundary line of 111. We have 111.65, but we're sitting at 110.31 right now. What are you looking at for the yen coming up?
Well, it's been a grind, because it's been going sideways for the past 2 weeks. I mean, arranged traders have been doing well, but it has been buffering higher move highs and higher move lows. And that's what it's doing right now. And right now, if you look at what happened in the interest rate market since unemployment, you have the 30-year and the 10-year that are slamming lows. Today, they're kind of quiet, but they're looking for higher rates. Higher rates means stronger dollar. So stronger dollar, unless the BOJ is going to start raising rates anytime soon, which they're not. I'm still saying that we're going to see the yen up at 112.5 to 113.5, and I have 116 by the end of the year. With the way things are trending. Especially if gold gets hit.
No, go ahead, man. Go ahead, please.
Yeah, I'm sorry. Just to finish. Yeah, especially if you see gold continue to sell off. I could see it. If you see gold sell off, oil continue to rally. Oil's been buffering higher move highs and higher move lows for the past week and a half. It hasn't been breaking out, but it's been trending back towards where it's higher range, And I see oil breaking out to the upside, gold going down, and if the rates go higher on the market side, there's no way that the U.S. dollar is not going to remain strong, especially against the yen. That's the one currency I think that I don't care if the dollar becomes a bear versus every other currency out there. I see the dollar being a bull versus the yen for the next few months, especially as if you look at what's going on now. I talked to somebody in Singapore last Monday. They're in full lockdown. As Asia starts to tighten up their belts with the corona stuff, especially, we already know what's going on in Australia and New Zealand. This impacts Japan huge. This really, really is a big deal for them. You're looking at the whole thing with the chips with Toyota and stuff like that. Remember, the Japanese have to deal with the Chinese, and their relationship is very tenuous at best right now. And the Chinese have an upper hand over Japan as far as production and stuff like that. That doesn't bode well for them, So I think that's where you have a lot of fundamental weakness in the yen. Like I said, the only thing I could see that would really strengthen the yen would be as if the Bank of Japan says we're going to start raising interest rates. But I don't see that happening. I just don't see that happening at all.
And back to yields for a second, because this one's so interesting, how it would play into just the markets, maybe some of those tech stocks that are through the moon. What are you looking at for yields as we come into the end of the year here? We have a meeting coming up later this month for the Fed. We get some interesting jobs numbers that will be on the docket in the next couple of months or so.
Sure.
And we've talked about the inflationary data, et cetera. What are you kind of looking at right now? We're sitting at about 1.35% right now, and I agree that the pressure's definitely been on a price-wise, to the downside here as we're seeing kind of a rise in yields. What are you looking for as we march on right now with some of those the interest rate market, the yields coming up?
Okay, well, as far as the interest rate markets, I think it's going to go one of two ways. But coronavirus is the big deal. If we can sustain our at least position where we're at now for the rest of the year, then I think that it's very, very likely that you're going to see interest rates from the market basis continue to trend higher, meaning bond prices going lower. Should we have, now here's a very interesting, and this is why the next few weeks are very critical. Last time at this year, my girlfriend and I are going out to Ithaca, New York in a month and a half to visit her niece. We may not be going there anymore, and here's the reason why. She goes to Colgate. Okay, last year at this time, they had no vaccinations, but they had strict policies as far as coming to campus and starting school. This year, they had stricter requirements, and they have an over 95% vaccination rate for students and faculty. However, as of this week, they have more than 5 times the COVID cases. They're already talking about going back to remote learning at Colgate within the next week or two. If that happens, and this starts to, how this will trend, that would be the thing where possibly the bonds could get a big buying spree in the short run, only in the short run. But if you look at what's going on with the real estate market and things like that, the bond market is itching and telling you that the Fed can they can keep on trying to prop it up, and they may not want to raise rates, but the market is dictating they will. And that's going to influence the currency market. As the rates go higher, market basis wise, then no matter what, the currency value gets affected by that as well.
Yeah. Well, I think you do a great job. Half the battle right now with so many variables in play in terms of whether you're looking at interest rates, whether you're looking at, is it the Delta variant? Is it the jobs number? Half the battle is deciding which variable in play you think is going to be the important one, right? That kind of shapes where the market goes, man. And I agree.
Let me just interrupt real quick. The one thing we've been talking about for a few weeks now is that the big bond numbers, the big economic numbers, those are becoming more and more important every day now, because we've learned, no matter what, whether we learn to live with coronavirus or not, the markets have. That's a fact, no matter what. Like the markets no longer are like, hey, what do we deal with pandemic? Now traders are like, hey, volatility, we love it.
Yeah,
we're
we know
locked
the
in our
world's
houses.
not ending, thank goodness. Yeah,
exactly. The sky's not falling, So, and that's the reality that we're dealing with now. So it's a new age. It's fun. I have friends who are like, how are you doing with this stuff? I'm like, well, really?
No, volatility is a trader's best friend, and they say it. I know, and there's a lot of volatility. So, I agree, man. What I try and wrap my brain around is that with every day that goes forward, with every number that we kind of push back the expected recovery, there's more expectations that fall on the future numbers, because if we're pushing it back, the rationale is, right, now it's that there's a 4 to 6 week delay because Delta variant. What happens in a month or two that maybe we don't hit the jobs number?
Right.
Well,
Here's
Teddy,
another thing. Look at the car dealerships around you. I don't know how they are by you, but they're empty.
Yeah. No, big
That's
time,
a problem.
Big
Take
time.
care. See you next week, guys.
Thank you, Teddy, for the weekly update, man. We'll talk to you next Wednesday. Okay.
Sounds great.
Folks, reach Teddy every trading day, forex-trading-unlock.com. We'll be right back, folks. Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&P right now, negative 6 points. NASDAQ 100 in the red by about 3.4%. We're negative 55 points, 15,621. Actually, the Dow positive, back about 35,000, 35,097. Other articles I had up here. Let's see Amazon. That's right. Of course, Amazon. Folks, if you want a long-term buy, I don't think there's a better buy, and there may be, all right? But when you're talking about retirement, right? I mean, what is it? Buffett out there, that rule number 1 is don't lose money. Rule number 2 is don't break rule number 1. There's a lot of companies, and that's what's so staggering about the returns that have been possible on some of the FANG stocks out here, is that, these returns are possible all over the market, folks, but they're usually with much smaller stocks where the threat that those companies might not be around in the future exists to a much greater degree. company like Amazon in the future, all right, they're dealing with some multiples, but man, they have their hand in almost every cookie jar out there. And when you think about it, they got Whole Foods, they have Amazon Web Services, you have Jazzy running the company now who runs Amazon Web Services, and I do have Amazon folks in retirement, okay, for full disclosure, but I'm giving you the case why. And this is the case after it just ran from 3,200 to 3,523. But you talk about cashierless technology, they're going to bring them to grocery stores. They already have the infrastructure in terms of deliveries. We know we see Amazon trucks everywhere. Being near Lakeland, Florida, I think we got an airport that they operate out of. Folks, I see Amazon planes all the time over my skies. They're going to have cashierless technology, and they have the backbone to run everything they do, let alone running everything everybody else does on the internet with AWS. But it's really interesting to see how they're going to bring this out, because it's coming, folks. Cashierless technology, you're going to walk in, you're going to walk out, you're going to have an app. It's going to figure out exactly what items you have. It's going to scan them all. It's going to be aware when you walk out. It's going to bill you on your Prime account. And they're set up pretty well to do it all. But it's coming right now as they're bringing cashierless technology to 2 Whole Foods stores that are scheduled to open in the next year. And I imagine that's coming pretty quickly, probably quicker than we all imagine. All right, folks, thanks so much for tuning in. We got live programming all day. Basil Chapman, he's back in the saddle coming up next for the Tiger Technicians Hour. Don't forget about Fast Market. They're going to be talking about Lululemon, Restoration Hardware. We got GameStop earnings after the bell as well tonight. Larry Pesavento at noon. Steve Rhodes at 1. Dave White at 2. Tom O'Brien, my dad, live from 3 till 4. Have a great Wednesday, folks.